Okay, great. So thanks everyone for joining us. So before I start with the new website, I wanted to just explain our plans and thought process around the changes we're making at Bharosa Club, because a lot of you have been using us for a while, you're transacting on us, and we realize that the changes that we're implementing, are going to require some of you to migrate to another platform, etc., to do your transactions. And let me just explain the thought process around it a bit. So the main motivator behind the change is that under the SEBI regulations, it is every year the compliance requirements are growing and growing for RIAs. And it's not economically justifiable for us now to comply with the SEBI regulations because they're too onerous for us, given that our focus is not on giving specific advice, but giving general advice. And one of the categories that we currently do that makes us fall under those regulations is offering transaction services. So that's really the main motivator behind exiting the transactions. And also, we feel that there are a lot of good platforms out there that enable you to transact in a pretty frictionless way, a lot of free platforms. They may not have all the bells and whistles of Bharosa in terms of features that you guys like, but our basic approach on that is, if there are any features that you really want us to sort of build in to the new website, we're all ears. So all you need to do is just message us. And if we get enough user support for certain features, we will definitely build them in. I mean, we are here for our members and we don't want to inconvenience you, and if there are things you like, obviously we're going to do our best to incorporate them in the new website. So just let us know. And, but the core of actually engaging in transactions is something that we will not be doing going forward, mainly because of that SEBI issue that I talked about earlier. So if there are any questions on that, just feel free to type them out on the chat. We had a few hiccups in terms of transitioning the old website to the new URL. That's all now, I think, smoothed out. So you guys should be able to transact without a problem. If you run into any issues, just email Anita. We are here to help you navigate through all of that. If you want to talk about any concerns you have around migrating, you want some help with that, again, Anita is a great resource to reach out to. We are here for you guys. So there shouldn't be any alarm bells or anything going off in your minds. Now, if we turn to the new focus of Bharosa Club. So it's actually not a new focus. Our main focal point at Bharosa Club since inception has been to essentially help people make better decisions by empowering them through tools and data and presenting facts in a fair and transparent way. And we're really leaning on that in the new website. So the thrust of it is this report that we've created, and I'm going to walk you through it to understand just how revolutionary it is in our opinion. There's a lot of computation that goes on in the back end when we create your report. So actually, we basically, some of you have gotten reports already. You'll notice that there's a very long calculation period where we're having the computer run calculations on your portfolios before we release the reports. And the reason for that is, it's not easy to benchmark portfolios, and I'll explain some of that here. But the real thrust of this is, if you cannot measure something, you cannot know it. And if you cannot know it, you cannot fix it. So the first step in really managing your portfolio as well is measuring and quantifying how you've done and how your funds have done, how much they cost, and are they generating returns that are worth it? What funds are good? What funds are bad? What is your asset allocation? How does that compare to the market average? What happens if you change that? How does your portfolio behave? How much are you paying your advisors? These are all routine questions that are extraordinarily difficult for anyone to answer, given the existing set of tools available in the market. And that is a shocking fact. I mean, there are very few areas in life where you kind of write a blank check to somebody and say, go manage my money, right? And finance is one of them. Unfortunately, you're not able to basically have a report card for how your advisors are doing or how you are doing as a manager of your own money. And that's really the central thing that we're trying to fix with our report. And again, for those of you that have gotten the report, please share your feedback. If there are features that are missing that you want us to build, again, we are in heavy development mode. So you have a chance to influence the direction we go. So just let us know and we'll work on building more and more good stuff into the report. So, okay, let me start with now doing a walkthrough of the report so you guys get an idea of the flavor of it. So the first thing I'm going to explain is just a little bit of the source for the report. So everyone that transacts in mutual funds, they have something called a common account statement. And that is a collation of all the mutual funds that you own and all the transactions that you've done. And that is the raw material that really serves as the basis for our report analysis. So we feed all of those details into our system. Separately, we have bought data on all the mutual funds in India, and we're able to therefore pair up the two data sets together, and we're able to see various interesting facts about the funds you hold, how they've performed, what they charge, has there been a manager change, et cetera, et cetera. So that's kind of the genesis of it. Now, one of the most difficult things to do in portfolio benchmarking is understand how you have performed relative to a benchmark. Now, why is that? I mean, it should be straightforward, right? Everyone sees the Nifty 50, Sensex. You may even see some debt indices that you're aware of. So you may be saying, no, it's not that hard to benchmark, but you in your portfolio have decided to put money into different asset classes, right? You may have decided to be heavy in debt and then gradually added equity over time. You may have put money in at the top of the pandemic, at the bottom of the pandemic, and all those things are going to affect your performance. Therefore, it's not easy to see how you've done versus a benchmark. You need to adjust for all of these factors when you look at how you've actually performed versus a benchmark. And that's what our technology does. So initially, essentially what we do is we go through your portfolio and we see your entire history, and we create a mirror portfolio that is constructed of only benchmarks. So every time you make a transaction, we make a transaction in the benchmark for that fund. So if it's a debt fund, it uses a debt benchmark. If it's an equity fund, it uses an equity benchmark. If it's a large cap equity fund, it uses a large cap equity index. So because of this, we are able to give you a very, very accurate picture of how you have performed, how your advisors have performed, and whether the funds you are in are actually beating their benchmarks or not. And as surprising as this may be, it may seem, we don't think this technology exists anywhere in the world. So this is the place where you can come to really get an accurate understanding of, are you beating the benchmark or not? Which at the end of the day, if you're paying somebody money, be it a mutual fund manager or a advisor, you're essentially paying them to beat the benchmarks, right? So with that, let's walk through the report. And again, any questions you have, just put them in the chat. We'll deal with them at the end once we do finish the walkthrough. Okay, so the report has three sections. There's the basics section, the nitty gritty, and the big picture. So basics is going to focus on just giving you a very high level picture of your portfolio and how you've done. Nitty gritty dives into the details, and there's a lot of detail in there buried in the report, which you can peruse at your leisure. And big picture is focused on giving you the tools to make big decisions about your portfolio. What should your asset mix be? What sectors are you invested in? Where are you betting in terms of equity? Are you in short-term debt or long-term debt? So we'll cover each of these sections. So let's start with basics. So first thing about the report is anytime you have a question about what something is, we have a question mark that appears next to it. Just click it and it'll give you a little explanation of what the chart is and what it's trying to show you. So if you have any feedback on our explanations, things still aren't clear, let us know. We will explain them to you via email, etc. So first thing we do is explain to you what is the bifurcation of your portfolio between index and active funds. So an active fund is a fund that charges a higher fee generally, and their aim, because they're charging you a higher fee, they're trying to pick and choose individual stocks or bonds to beat the index. And that's why they charge you the higher fee. They say, we're going to charge you a higher fee, but we'll beat the index, right? We'll beat the benchmark. The index fund takes a different approach. It says, we'll charge you a very low fee, right? And we are not going to try and beat the index. We're going to meet the index. We're going to slightly underperform the index by the amount we charge you for the fee, but we're not going to try and beat the index. So these are two very different strategies. And you need to understand in your portfolio, if you're paying for active funds, are they actually beating the index or not? And this report helps you understand, are your active funds actually beating the index? And if they're not, then maybe you want to consider moving some of that money to lower cost index funds. So for example, this customer has 100% of the portfolio in active funds, which are charging him or her an average fee of 70 basis points before any commissions or anything, right? And they have nothing in index funds. And you can see that these active funds, despite charging a pretty healthy fee, have actually underperformed the benchmark over the last 5 years. So you can toggle different time periods, etc. But the general principle that I would use when looking at your reports and data, the longer the time period, the more valuable the data. It may be easy to beat the benchmark just through luck in 1 year, but beating the benchmark over 5 years through luck is difficult, right? So the more the time period increases, the more the signal comes through and the noise is eliminated. Okay, so that's this chart. It's showing you what your rate of return is versus the benchmark for active funds, index funds, and the total portfolio. So this person doesn't have any index funds, so there's no return for that. But you can see the active funds gave a 13.2% return per year average over the 5 years. So this would be the IRR versus the benchmark, which gave a 13.4% return. And again, this is adjusted for everything: asset mix, when they bought, when they sold, if the asset mix changed over time, all of that. So it gives you a very, very accurate picture of your performance. Then we have the section on optimization. So what we do here is, for every fund in your portfolio where we have data, which is most funds, for some very new funds, NFOs, etc., the data may not be in our system. So there are certain funds that could be excluded from your report. We're currently working on a dashboard which will show you what funds are excluded from your report. But for the vast majority of people, this should capture most of the funds in your report. We run those funds through a series of automated tests. And if they pass all of the tests, they come under healthy funds. And if they fail even one of the tests, they come under caution funds. So it helps you figure out which funds you need to focus on and review. So now let's move to the nitty-gritty section. Okay, so the nitty-gritty section begins with that fund health that I was talking about before, healthy or caution. So anything with the orange circle is caution. Anything with a green circle is classified as healthy. So you'll see that most of the funds are caution. Now, the one thing I want to preface here is, just because we have called something caution doesn't mean you have to run out and sell the fund. Okay, this just means for some reason it failed one of our tests. And you have to use your own judgment here when you're reviewing the report to see, do I care about the reason that it failed the test? In some cases you may care, in some cases you may not care. And we have a pretty rigorous set of tests. That's why you will see in most portfolios, you won't find too many green funds, because some fund will trip one of our tests, right? It doesn't mean it's a fund that you have to sell, but it's one you need to look at and understand why it tripped. So let's take an example. So let's take, for example, this SBI blue chip fund. So the table here is sorted by share. So how much of the portfolio is in that fund? So from biggest to smallest, you can change the sort order like this. So for example, if you wanted to sort by number of issues, do that. And it will also show you which advisor put you in that fund. So you can basically see you can see basically who put you in that fund, and if there's one advisor that's putting you in lots of unhealthy funds. So let's take this fund as an example. Okay, so let's click on SBI Blue Chip Fund. So you'll notice when I clicked on it, suddenly the top changed and it shows colors on all the tests. So this is telling you which tests were failed, which tests were passed, and essentially using this, you're able to get a sense of why the fund, which issues came up for the fund. So this SBI Blue Chip Fund had an issue in performance, it had an issue in fees, it had an issue in commissions, it had an issue in concentration and management change. Now let's dig in a little bit deeper, because this fund seems to have a lot of issues. I want to understand more. So to do that, you just click this thing here, and the detail comes down here on the fund, on each of the tests. So we can see over the last 5 years, this fund has given us a 13.7% return. Its benchmark, the benchmark which it's trying to beat, has posted a return of 14.9%. So it's underperformed its benchmark. That's why it tripped that test. Okay. Then fees. It looks like the average fee for a mutual fund in this category is 0.93%. This one is charging 0.95%. So look, our test is binary, right? If it's above average, it gets classified as a fail. But here it's very slightly above average. So we may say, you know what, it's okay. It's a little bit expensive, but I don't care, right? Then commissions. So this customer is in 100% regular plan of this fund. So he or she is paying commissions on their total AUM in this fund. So they're paying a lot of hidden commissions on top of the fees. Then you can see there's been no change in management. So that's come out healthy. And you can see on concentration, again, it's concentration means is the fund concentrated in very few stocks. And if that's the case, then you're taking some risk with this fund, because if those few stocks don't do well, then the fund will not do well. So you're not diversified in the fund, right? So you can see here it's a little bit above average. Again, we may not care about that. So as I review this fund, I say, what are the two most important things? One, the commissions that I'm paying, and two, the performance, right? So I can click for even more details. So it'll take me to a separate page. It'll show me I've been holding this fund since 2016. I have 6.7 lakhs in here. And here it'll give me even more detail on each of the tests. So I can see that over 5 years, it's underperformed. Over 3 years, it's slightly outperformed. And over the past 1 year, it's underperformed. And in terms of expenses, I can see the trend in the expenses. Now, in terms of direct versus regular, I can see that I'm in 100% regular plans. And I can see there's a huge fee difference, right? I'm paying 1.67%. But if I were in a direct plan, I'd be paying 0.95%. So I could save a lot of money by switching into direct plans for this fund, right? And I can see that the management and the bio, the manager hasn't changed, and I can see what stocks it's concentrated in. So its top holdings are HDFC, ICICI, and Infosys. So this can help you decide if you want to stay in a fund or exit it, right? So that's the fund health tab, and you can click on any of these funds to get detail on all of the tests. Next tab is the performance tab. So this will show you how the top chart shows you how you've performed against the benchmark since over the past 5 years. So you can see this person initially outperformed by quite a bit, because it's easy to outperform just by luck in the short term. You happen to pick a good fund or whatever, but over the long run, it's very difficult to beat the benchmark. And you'll see that this person, therefore, had a little bit of outperformance and now has underperformed the benchmark for a long time, right? So they may want to consider, hey, should I be in index funds instead? I'll minimize my expenses. If I'm anyway going to just meet the benchmark, why not pay lower expenses? And here we will see the fund detail on all the funds that you're in over the past 5 years, which ones have beaten the benchmark and which ones have failed to meet the benchmark. Anything shaded in green is something that's beaten. Anything shaded in red is something that's failed to meet the benchmark. So this, you can change the time period to see over different periods how this data fares. Okay, and you'll see sometimes there's some funds that are excluded from the table. This basically means that we don't have data for those two funds over the past 5 years. So maybe that fund was has only been around for 3 years, so we can't show 5 years of data, etc., etc. So sometimes we exclude funds from certain charts. Okay, now in terms of asset classes, should you be in equity? Should you be in debt? Should you be in liquid? Should you be in other? One of the key data points you need to consider is the rate of return. How much has each asset class given you in each of those periods, right? So here you get the answer to that question. You can see in your portfolio over the last 5 years, how much have you gotten in equity? How much have you gotten in debt? How much have you gotten in liquid? How much have you gotten in other? And how does that compare to the benchmark, right? So this person's actually done very well in equity. They've gotten a very nice return. But the interesting thing is they've actually underperformed the benchmark by quite a significant margin. So this basically tells you, instead of paying for all these fancy mutual funds, if I was in a simple Nifty 50 index fund or a Nifty 100 index fund or a large cap or small cap or mid cap index fund paying very little, I would have actually done better, right? Same thing in debt, so this will give you a lot of data in terms of figuring out how to save money in terms of your portfolio and make sure you're getting value for the funds that you're investing in and paying. You can look at that same chart over time for any of these asset classes. So equity, debt, liquid, other, to understand how your performance has changed over time. You can also see how your asset mix has changed. So this person was in a lot of equity at the beginning of the 5 years, then shifted to a mix of 50-50 equity and debt in the middle of the 5 years. And again, you can change the time period here to analyze over any time period. Okay, advisors. This is a very important topic for people. So a lot of you use advisors, and you should use advisors because advisors can add a lot of value, right? But it's very hard to judge their performance. We enable you to do that. So here we look at your portfolio, we see all the advisors you're using, and we run our analytics on those advisors. So this person has part of their portfolio managed by an advisor, part of their portfolio direct. Now we can see that the direct portfolios actually outperform the advisor portfolio. They've beaten the benchmark in direct and they failed to beat the benchmark in advisor. Now this tells you something. Maybe the advisor is not worth the fees you're paying. How much are you paying the advisor? A lot of people don't even know, because if you're paying the advisor through regular funds, that commission is deducted from your return without you ever cutting a check. But how much is that person making off you? We quantify that number here. So you can see this person's paying 21,000 rupees a year in the past year to their advisor, right? So now you can run the calculus of, is that worth it or not? Is the advisor giving me enough value for that or not? Then direct versus regular, we show you exactly how much you've paid in fees and how much that is of your as a percent of your AUM over time. So you can see this person has been pretty much always in 3/4 of their portfolio in regular funds. And you can see in each regular fund how much that will cost you over the next 5 years, if the next 5 years are similar to the last 5 years. So you can pick a fund and see, if I stay in the regular fund here, over the next 5 years, cumulatively, I will lose close to 1 lakh in value. Is that worth it? We also have other topics that I'm not going to delve into a lot of detail here, but if you have questions on them, you can feel free to email me and we can discuss them with you in more detail, because I want to make sure we have ample time for question and answer and anything else that you guys want to discuss. So that's basically the report. Here we look at your ELSS funds, making sure you're getting in and out of your ELSS funds quickly. Here we look at hybrid funds, which tend to not be great values. So for example, this person has a hybrid fund, they're paying a fee of 1.2%, which is expensive. And we're not fans of hybrid funds. And you can read the text here to get an understanding of why we don't like hybrid funds. Then the big picture section. So this is all about understanding how your portfolio comes together. You have this big portfolio, very complicated, tons of mutual funds. How does it all stitch together? Does your portfolio compare to the average portfolio? These are questions that are difficult to answer, but you should know the answer. And our technology, again, makes it possible to answer those questions. So let's start with the asset mix. So you can see this person's asset mix is here, and we can just hover over to see the exact percentage. So 53% is in equity versus the average portfolio of 52.4%, right? 36.7% is debt, 41.1% is debt in this person's portfolio. So asset mix is pretty similar to the market average. They have a little more debt and a little less cash, but it's pretty much on the average, which may or may not be a good thing, right? If you can keep your money in the market longer than average, right? Because your expenses are low, you don't have that many liabilities or dependents, you may want a bigger equity mix, right? So these are questions that help you understand where you stand and if that makes sense in the whole context of your life, right? So we can't, at Bharosa, for example, we can't tell you what your asset mix should be without really understanding a lot of details about yourself, right? But we can give you the data to understand where you stand and help you think about, should I be higher equity, lower equity? How do I compare? All that stuff. So the next chart is really about helping you play around and understand the impact of the equity mix. So what we do here is we take your actual portfolio today and we back test it at different mixes of equity. So it starts at 53%, which is the person's current equity mix. And it shows you the CAGR. So that's the average return over 5 years. And it shows you the maximum decline over that 5 years. So to give you an understanding of how bad things can get in a downturn. And you can choose to focus in on the 5 years or the downturn in the chart because they're both relevant, right? Why don't we have 100% of our money in equity? The reason is, look at what happens to our maximum decline. Nobody wants to see a 40% decline in their portfolio, right? And this is the reason we don't have 100% of our money in equity. Why don't we have 100% of our money in debt? Because no one wants to see a rate of return of only 7.3%, right? And this is showing you the impact at different equity mixes. So you can play around with this and see, how much return do I want to aim for? How much risk do I want to take? And again, you can focus in on the decline to really see how that equity percentage dramatically changes your volatility in the downturns, right? So this is a tool that helps you do that. Then you can go into the equity holdings and you can basically see, what am I betting on in my stock portfolio, in my equity portfolio? What sectors am I banking on and how does that compare to the average portfolio? And the general principle that I would use here is, unless you have a reason, you should be trying to match the average equity portfolio. You do not want to be betting heavily on a sector unless you have a reason to do that, right? So here, this person, their average equity portfolio looks pretty similar to their portfolio, that they're heavy a little bit in auto, but other than that, and a little bit heavy in raw materials. But at the end of the day, it's relatively similar, right? So no red flags there. And you may decide, hey, I know a lot about the pharmaceuticals industry. I want to be heavy in pharmaceuticals. That's a different thing. But if you're heavy in pharmaceuticals without understanding why you're heavy in pharmaceuticals, that's a red flag, because you need to understand why you're betting on something. You don't want to bet on something blindly, right? So same thing here with market cap mix. You can see this person is heavy in mid caps and small caps. Do they have a reason to be heavy in mid caps and small caps? If not, that's an opportunity to fix the portfolio, because you, again, do not want to be betting on something without a reason. And then we also show you how your portfolio rolls up and what are the individual stocks you're betting on, so that you can basically say, you know what, I also have a stock portfolio that I do on the side where I pick individual stocks. Now, just through your mutual funds, you own 6% of your portfolio is in ICICI Bank, 5% is in HDFC Bank, 3.7% is in Infosys, 2.9% is in HCL. So you can now understand, when I buy stocks, maybe I don't want to buy these stocks because otherwise I'm going to have too much exposure in these stocks. So same thing on the debt side, we give you an understanding of how your debt portfolio compares to the average. So again, you can make judgments about how you compare versus others. So that's really the report in a nutshell. And there's a lot here, and go through it in your leisure. And please give us feedback. We'll constantly be rolling out improvements and more features, etc., to this, to give you an understanding of where we're going with this. So what this report helps you do is understand where you stand, and helps you ask questions about your portfolio that need to be answered, right? What it doesn't do is it doesn't tell you how to change your portfolio, right? We will be moving a little bit into that direction at some point. We will actually help you come up with alternatives and stuff. That will be the next step that we take, which will be a few months down the line, but that's kind of the direction we're going in. So that's on the radar screen. So with that, I'm going to stop and open it up to Anita for the questions that we've gotten.
Okay, so I'm going to club the first two questions from Barnali and Arun, and those were more concerns about the transactions and the SIPs, etc., that they have going on. And so currently when you use Bharosa, you're actually using, so Bharosa uses MFU in the background. So it's a white label product. So actually, for us to get you to transition onto MFU is extremely simple. And you can port the SIPs onto MFU. There's no rush to do that because like we've said, we're going to have transacting up till August 1st. But we would like to get that done so that you can rest it in ease, because that's one thing off your checklist. So we'll work with you all to help you transition in a very, very smooth manner. And if there's any other portal that you want to use, your investments, Barnali, to answer your question, your investments are always there, whether it's X, Y, or Z platform. In mutual funds, porting them over is extremely simple. Okay, so the first question is, one second. Does it list which specific test a fund failed? Yes, it does. So Amit, it was marked P or C, etc. And then you go up and click the details and you can see the details. I hope you got that part. And how will a retail investor choose alternatives? So yeah, Sahil just address that.
I'll take this. Yeah. So my advice in general is, unless you have a reason, you should be picking index funds. Okay, now this is a personal philosophy of mine. I've worked in the investment space for years, and I've seen how difficult it is to beat the index firsthand. In the hedge fund industry, if you've seen any of our videos, you've heard this stat before, but in the hedge fund industry, a top analyst will be right 60% of the time and wrong 40% of the time. That is like off the charts performance, right? So it's very, very hard to beat the benchmark. And just so you guys know, we've run this report now with, I want to say, maybe 40 portfolios. And I think the latest number is 2 people have beaten the benchmark over 5 years. So that shows you how difficult it is to beat the benchmark. So my general advice, again, we can't give you specific advice without knowing a lot about you, but my general advice is, unless you have a concrete reason, your default should be indexes. Why? Because they're low cost. And that way, you're not taking a hit. You're not taking a hit in fees for uncertain future performance. Sure, an active fund may do better than the benchmark. It may do worse. It's a coin flip unless you have a specific reason to believe that you like a manager, or for some reason you think that this guy is really good and he will beat the index. So barring that, my advice to people in equity funds in particular, because debt, you don't have a lot of index options, or maybe even any index options, but in equity, try to use index as much as possible. right? So this tool will help you understand which are the laggards in your active portfolio. And what I would do is replace those laggards with indexes, and we will get more into the direction of suggesting to you which indexes, right? That'll be the next step that we go. But we're not there yet. We need to build the technology, but we will help over time you fine tune exactly what index is a good replacement for the fund that you're switching out of.
Yeah,
okay,
that makes
so
sense.
the next question is, can I check details of only the funds I hold in my portfolio?
Can I check the
details of only the funds I hold in my portfolio?
Yes. As of now, you can only check the details of a fund that you hold. But we actually do have technology built out that lets you check any fund, and we may release that pretty soon.
The next question, one second.
And I think that's a very good suggestion. I think, Ujjwal, if you're on, let's note that down. And that's a great feature that we can add to the report, which will allow people to search and find the test results of any fund, right? Because that's trivial for us to do. And it's a very good user value add there. So thanks for that suggestion. I think that's a great addition. We'll incorporate that.
Okay. The next question is, so is there a static constraint for report generation, like a fund should be at least X years old to show this comparison?
So great question. So we have a set of rules that we have before we include a fund in your portfolio, which is why certain users that have entered into new funds are a bit surprised when they see their portfolio and they see funds missing, right? The reason is, if we don't have data on a fund, we're not going to include it in your report, because everything that we show you is data driven. We are not making subjective calls here. We're not telling you that we think this fund is great or that fund is great, because honestly, I've been in this business long enough to know that those subjective views are not worth anything, right? Much more impactful is giving you the data. Here's how much you're paying. Here's how it's performed. Now you decide if you want to stay in the fund or not, right? So the test that we use is, do we have enough data to include the fund, right? Do we have NAV data on the fund? Do we have their portfolio details? So for very new funds, we don't have that data. Now, let's take performance as an example. The performance test is only rendered for funds with greater than 3 years of track record. And the reason is, it's not fair to judge a fund on only 1 year. If a fund underperformed for 1 year, there's very little you can conclude from that, because again, the markets take time before signal comes through, right? So we do have a logic for each thing that we do when it's relevant to show you that detail.
Okay, the next question is composition of benchmark fund. So what is the composition of benchmark fund?
So the composition of benchmark fund is going to vary based on every user. And this is the amazing thing about the technology, right? We look at your portfolio and we construct the right benchmark for you. And what I mean by that is, let's say that we have a customer that is in 100% large cap stocks, and we have another customer that's in 50% large cap, 50% small cap. It is not fair to use the same benchmark for both, right? That doesn't give an accurate understanding of the performance. So what we actually do in real time, basically tracking every move you made, we construct the right benchmark mix for you at every transaction point, right? So the benchmark portfolio is going to vary not only per user, but in the time period also. Like maybe 5 years ago, you were 70% debt. In that case, your benchmark is going to be 70% debt, 30% equity. And it's going to pick the right debt benchmark for you also.
So can I clarify that a little bit? At least my understanding.
Yeah.
Okay, so essentially, I think the way the technology works, and Sahil, correct me if I'm wrong, is that you take every fund, and that fund has specified what its benchmark is. in the prospectus of the fund and stuff like that. So it
Correct.
says that, you know, if I'm the fund manager, this is the benchmark that I'm trying to, that you should use to evaluate my fund. I think the technology, what it does is that for every single fund in your portfolio, it
Yes.
looks at the benchmark that that fund manager has specified for the
So
fund.
that is that a very good clarification. I think that explains it nicely. That's exactly what the technology does, but with one important proviso. We don't have data on every single benchmark, right? So we have data on a lot of benchmarks, but let's say that the fund uses a benchmark that we don't have, right? What our technology does is it then finds the closest benchmark that looks like that benchmark and incorporates that. So for most cases, maybe 80% of funds, it will use the actual stated benchmark. And for maybe 20-15% of funds, it will use something that looks very, very similar to it.
Okay.
Okay, thanks.
Yeah.
Is the next question, is there a way to invest periodically in ETFs over indices outside India? So S&P 500, Russell 2000, etc.
You know, I'm sure there are, I mean, there definitely are ways to get exposure to ETFs, you know, where I guess what the question is there a way to do it programmatically, like through an SIP or something like that? And yes, there should be through Zerodha, for example, or something to set up recurring investments into those particular ETFs.
No, I
Yeah,
don't
so
think.
Navi has recently come out with a fund of funds, and that fund invests in Vanguard's total return ETF, which is one of the most popular, one of the larger, I shouldn't say most popular, one of the larger ETFs for investing in the US market, you know, and it invests in some 4,700 stocks in the US market. So increasingly, you will see that the mutual fund industry is will provide you, I think, opportunities to invest in ETFs, which are US ETFs. So currently, to my knowledge, there is only the Navi ETF, the Vanguard Total Return ETF.
Okay. Will I be able to create family profiles of family member wise
Yes.
to track their MFs, or do I have to have separate logins?
Very good question. I forgot to mention this, but this particular demo that we're showing you, it only has one investor. But if you give us, let's say, 4 CAM statements, and in those 4 CAM statements, we uniquely identify, say, 5 PANs, you will have access to view the report in any combination of those PANs you choose, just by clicking the menu here and picking which investors you want to see. So if your family has 5 different people, right, you can choose exactly who you want to include, who you want to exclude. You can change that, all that stuff. So yes, we'll have the ability to do, you have the ability to do that.
So you can do up to 5, right?
Well, right now we don't have a limit specified, although I think what we're going to do is end up putting a limit, because like I said, this the computations are very, very time consuming. So we've noticed that with customers that have lots and lots of investors, the report ends up taking a very long time to calculate. So we will probably cap it at some level. Ujjwal, I think, what's your thinking on where we cap it?
Ujjwal's on mute.
Okay, he's on mute, but I think we will probably cap it at maybe 3 CAM statements or so. That's still plenty, you know, so I wouldn't worry too much about that. I mean, 3 CAMs is plenty. So yeah.
Okay. Any backtesting info displayed for benchmark and funds like Small Keys does and compares for indices versus cases?
That's a good question. I think we may build that, and Ujjwal, just make a note of that. I think this is a good suggestion. I think we will provide some of that data in the big picture section to help people understand how large cap compares to mid cap to small cap, and how various sectors have performed. It's a good thought. we will look at incorporating some of that in big picture.
Any integration with risk profile of an individual. Mutual funds do follow a riskometer, and is that useful as an information data point if that risk factor changes over time for a fund?
Yeah, so this is a good question. See, I think generally in finance, you don't want to outsource your thinking to anybody, right? Without meaning that you always, it's fine to look at other people's opinions. It's fine to, take their judgments, but you always want to do your own thinking also. And I'm not a fan of these riskometers and all, because at the end of the day, who knows how they were created? Who knows what data went into that? Here you get the underlying data. You're able to see how concentrated is the fund. The more concentrated it is, the greater the risk, right? So you're actually able to look at the individual data around it. And you can look at the back testing that we show you with your portfolio to see how volatile it is, right? So I'm not, we don't look at the riskometers and all that in our algorithms. What was the other part of the question?
So is it integrated with a person's risk profile? That it does not, right? Because you're not.
So yeah, this is an important point. We do not do your risk profile, right? And so we only give general tools and advice, right? So none of this is reflective of advice that's tailored to you. It's data to help you make decisions based on your individual circumstance.
Okay, how will new data come into Bharosa for SIPs executed through MFU or any other portal? Unfortunately, let me answer that. Unfortunately, there is no way with the current regulations that we can get data automatically. So if you're transacting from somewhere else, there's no way we can get data automatically. The only way to do it is by uploading a CAM statement every once in a while.
Yeah, and so we will look at doing a monitoring service for people down the line. And the way that will work is we'll set up filters on your email so that you don't have to worry about sending us the CAMs, right? So if you become a monitoring customer, basically we will generate a statement whenever we need it, right? And it will automatically get forwarded to us. But that's still down the line. We're months away from releasing that. But that's the kind of direction we are going.
So I would just like to clarify here as a user currently that, this, for me at least, I have very few mutual funds and I only use them for tax saving purposes. But for me, it was useful to just use this report to get an understanding of, what my tax saving mutual funds were. And now the tax saving season is coming. So should I, which tax saving fund should I use? So I used these and I found that they weren't doing all that good. I used the old Bharosa to see which tax saver funds were ranked highly. And then I did a little bit of my own research and I am now decided which tax saver fund I'm going to use. Right. So this thing at the moment, the value of these reports are to get a very good understanding of where you are and do you need to make any changes and start the process of thinking about what changes you make. Now, based on, I think the plan is that based on the feedback that is received from the users who pay for the reports, get the details of the nitty-gritty, etc., as to what will the optimization tool or the monitoring tool, whatever it's called, will be, which is the next version, which will have probably a little bit of a higher charge, because this charge is just a one-time charge. Okay. So I would not worry about after doing this once, worry about getting every single CAMs and trying to redo this every now and then.
Yeah, that's an important point. See, like this report should be done maximum once a quarter, if that. I would do this with my portfolio once every 6 months, do a comprehensive review of it, see how I'm performing, get all the data I need on my portfolio. Even once a year is fine, right? Depending on how plugged in you want to be, right? This is not intended to be something that you check compulsively every week, that's not how it's built. That's not how it's presented. We are not even showing you recent performance, right? The most narrow our time period gets is last 1 month. We don't even show you the daily return, right? Because to us, that's not the goal of this report. The goal of this report is to give you the stuff that really matters, which you really need to look at maximum once a quarter.
Okay, the next question is, when you said that you may choose to act on the test failing or not, so that was the healthy funds and the caution funds, wouldn't this be a bad UX, because this will still make a user worried that there is something wrong and there is no insight to mitigate it?
So it's a good question, in terms of nomenclature and wording and all these things. See, my general belief is that there is too little questioning going on the part of most people when it comes to their portfolio, because you don't have the data to question. Most people don't have the data. I mean, nobody has the data actually, because it's impossible to get, right? I mean, how are you going to assemble all this data for your portfolio? How are you going to go and get expense ratios for every fund in your portfolio? How are you going to get performance stats for every fund in your portfolio? The data exists, right? But collating it all together in a nice, pretty package that's usable to you is not something that was possible really, prior to this, right? So the goal of our report is to trigger those questions in you, right? So if our UX is going to swing one way or the other, and I take your point, maybe calling it caution, maybe a bit too alarmist or whatever, we want you to question it. We want you to engage with it and look at the data and start seeing, is it worth it to be in this fund? Is it not? What are the key metrics that matter, right? Because see, we intentionally are staying away from giving prescriptive advice right now, right? And the reason is that I am not a believer in telling people what to do in finance, because it never ends well. If I tell you to do something, what if it doesn't work? How are you going to react? How are you going to know if it doesn't work? You're not going to know, because you outsourced your thinking to me, right? On the other hand, if I show you the data in a way where you understand it, right? You make the call, right? You make the call then when you understand the data. This is why Bharosa is calling it caution. Now you figure out if you want to stay in it or not, right? By looking at the data and making that judgment. That is a much more powerful way to sort of invest, because then with each fund, I stayed in this fund because it was a little cheaper. I mean, because it was a little cheaper. It's okay if it underperformed a little bit. I still believe it'll outperform in the long run, and it's not expensive. Maybe the next time you run the report, the fund has become more expensive. So now you say, okay, now I'm going to exit it, right? Because you made the decision, you know how to react. If I made the decision, you don't know how to react, right? So that's the kind of design principle that went into it. It's not intended to be alarmist. If it's coming across that way, then, that is not something that we will look at changing the nomenclature and all that stuff. But it is intended to cause you to pause and look and engage with the data. Our report has no value if you don't actually sit and look at the numbers.
Okay, the next question is, the previous portal, so that's oldbharosaclub.com, had downloadable data for small cases, index funds and mutual funds, fund of funds, etc. Will that be available in the new site?
I will need to check to see what our data vendor policy is on making data available through Excel dumps. I suspect we will not be allowed to do that. But if we are allowed to do that, I have no problems with giving raw data in Excel, but we need to check on that. In terms of the other part of the question on small cases, we would love to be able to do the same thing with small cases. The issue is that we don't have the data on small cases. They don't have an open API for the data. So we can't get the data to see what a small case holds. We can't run it through these algorithms and all these things. So we may incorporate, actually, I think, Ujjwal, let's do this. Let's include what we already have on our small cases in the new site. I think that is valuable to have data on how small cases are doing, whatever we can, but we don't have enough data to run it through our algos. But whatever's there on the site currently, we can look at bringing it into the new site.
Okay.
Because I know a lot of you are interested in small cases, and it would be valuable. And
Ujjwal, I'm trying to unmute you, and I'm failing.
Work.
Finally succeeded.
So for those of you that don't know Ujjwal, he's a core part of the team. He joined about a year back. He's the technology brain behind all of this. So he's a really sharp guy. Worked at Disney Interactive right out of college, reporting directly to the CEO, and really good guy. So he's very much on the team, and a face that you will be seeing much more of. Well, we can't see your face right now.
Next time.
So what other questions do we have?
Okay, so it's basically questions on some of the features. So this is really referring to compare schemes. The level of information in compare schemes just now, I think, can be very easily replicated in the new site. And I think enough people are finding that useful. So that is return data.
So one of the things that at least I plan to do as a user is that I plan to use the old site, because that's going to be available till August 1. And it will
not August 1. Sorry, May 15th.
May 15th, is it? Okay. So May 15th. Okay. So till then, and I also intend to give feedback to the Bharosa team on what I want them to have in the new one before they retire the old one, right? Like, so, and to the extent that they can do that, that's fine. Otherwise, I'll decide whether I want to continue using Bharosa Club or not.
Yeah. And so, look, at the end of the day, the more feedback we hear from people, the more motivated we'll be to build certain features, right? If one person tells us, hey, we want this, that's one thing. If 10 people tell us we want this, then it's another thing, right? So let us know, already.
So all Arun's requests are really stemming from the compare tab. I think that can be replicated quite easily.
Yeah, it can be. But yes. In terms of the timeline of committing that we'll have it all done before the old site is phased out, that will depend on a case-by-case basis on the features, but we will do our best.
Yeah. So I think that whole plan of what is planned, once you guys have it, that'll help. And just in terms of feedback, at least for me, the features that I would like to see on the new site are the compare thing, that functionality, because I use the fund ratings in there, and I use the capital gain statement.
So fund rating, I'm not a believer in personally. So I understand the legacy algorithms and how they work. I do not believe that we should be rating funds, but we will have the data, the raw data there.
Yeah. No, there may be a better way to do it in whatever optimization or monitoring tools you're coming up with. But what I'm saying is that that's something that one needs, because if you're trying to optimize the portfolio like I tried to do with my tax saving. So this told me that, okay, I probably need to change, but what do I need to change to? That was not very clear to me.
We got this, yeah. Okay, the next question is there any feature to benchmark stock portfolio with index? And here the question's not over. I mean, in case of small case investments, there are slippages, so it's not worth comparing fund manager index with benchmark. And currently, small case gives comparison of the fund with the index, but not with actual execution. I'm not sure what the question means.
No, I understand that question. It's a very perceptive question. They're saying that basically small case shows you data on a theoretical basis.
Yeah.
In terms of actual realized results. And this is something that a lot of people have been pointing out with their small case returns. The website says X, my portfolio says Y. What's going on, right? So yes, that has been an issue with small case returns historically. And they have taken steps to remedy it. I haven't looked at, the new way they calculate it to see if it makes sense, but the old way certainly did not make sense. In there. So in terms of stocks, it is something that, look, the technology is extensible. Mutual funds are nothing but collections of stocks. So we can pretty easily extend this to stock portfolios also. The gating item on that is figuring out the import technology. We need to spend some time to figure out how to build a way for you to get your stock portfolio data into Bharosa. And Zerodha doesn't make it easy, for example, to get a dump of your stock data. You have to go year by year by year to do it. But it's on our radar. It's something that we want to do because it's very easy for us to do it. It's just a question of how we get that data from you.
Okay, can I upload the CAS of my family members for my account? How can I upload it? Okay.
So the process is simple. You sign up with Bharosa. And again, you have to create a new account. This is a new website, new account. Your existing website will not, credentials will not work on the new site. And then you basically feed in all the emails that you want us to fetch CAMS statements from. And then you forward those to us. And once we have all of them, we'll prepare your report.
With my current Bharosa membership, will my report be generated and sent to me automatically, or do I need to upload my CAS? You'll have to, it's a completely different, Sunil, this is a completely different website. So you need to sign up again on the new website and the report will be generated for you. You do need to forward it to us. And again, I think your question on family has been answered earlier, but yes, you can include your family members in the group.
And one of the questions we've been getting from a few people is this included with my existing membership fee or not? It's not, it's incremental. This is a new service. The existing website exists. You can use it. If you don't want to use it anymore, just get a refund. It's with a click of a button, you can get a refund and you can then sign up for the new thing if you want to use it, right? But currently we don't have a way for you to refund on the old site and apply it to the new site. You'll have to get a refund and then pay on the new site, right? So we don't have that application technology there.
Okay, the charge for the report, is this one time or is it annual?
Good question. It's one time, but again, this report, I would do it semi-annually, right? So, you can think of it as, ×2 to get the annual cost, right? In there, but it's not a subscription, right? Because again, we don't recommend you do this like constantly. Not much is going to change in your portfolio every month that you need to look at this so frequently, right? It takes time for these changes to percolate through the data.
The next question is, on the new Bharosa portal, will reports be generated only for mutual funds or for individual stocks? I think Sahil just answered that yes, porting over to stocks is very easy from our end. We just have to figure how to get your stock holding portfolio into the new website.
Yeah, and here's a thought. So I would also like to understand from users how opposed they are to manual entry, right? Because stocks, again, technologically we can do very easily, but the import thing is the big thing. So if you're very keen on stocks, right, are you willing to go through the brain damage of putting it in, in an Excel and sending it to us or something like that, right? Because we can release stocks quicker based on that answer. Otherwise, we have to build some machinery to import it.
Yeah, so I can give you feedback on that immediately, and maybe the other
We
users
don't
can.
need to get the feedback here. Just email us.
Okay. Yeah. Okay. Cool.
Okay. Is there a difference between mobile browser and laptop? Am I missing any features available?
Yeah, it's
if
a
I use
great
mobile?
question. Great question. So while our report works in mobile, okay, it doesn't break, or I mean, it works. We have not tested it extensively with mobile. You will there, because of the screen size and everything, there is detail that is hidden, harder to get to in mobile. It's all there, but you have to go through more hoops to get the data. So it's really optimal viewing experience is to view it on a laptop or a iPad or a big screen, and or a desktop. And the best browser to use to view it is Chrome. There are one or two buggy issues in Safari that we haven't figured out how to fix. It works, but there's some sticky tooltips and all that you'll have to deal with if you use Safari. So we recommend Chrome on a desktop or laptop.
Okay.
But yes, you can use it on a mobile.
Can I add an email to fetch the account statement later? Okay, so Arun's someone who's already bought a report. He wants to add an email. I think that's his question.
Yeah, absolutely, Arun. So there's no automated way to do that, but just email us. We'll do it manually, and we'll regenerate your report. The one thing I'd ask you is, while we're doing that, not to access your current report, because we'll be recaching it, so and recomputing it, and if you just wait for our sign off until we say, okay, your report has got that new email in, it's ready, then no issues. We can recompute.
Okay, so Amit says that there is an option of, one second, an option of downloading historic orders on Zerodha for small cases. Is this a good alternative to upload Excel history to compare stock investments?
So Amit, very interesting. I need to investigate this. My understanding of the Zerodha reporting is they give you Excel data on an annual basis, which is a very limited utility, because again, to really get any signal in finance, you need to look minimum 3 years. We like looking at 5-year data. So to get it, a user has to generate this report 5 times, right? Which is the key bottleneck. I'm not sure with this small case report if it gets you since inception data or not. If it does, that's fantastic. I'll look into it. Thanks for letting us know.
Okay, Sunil's question.
Actually, Amit, if you don't mind, could you forward that report to us so I can see exactly the format of it?
Okay, Sunil's question is, am I correct that we get to navigate and test the new portal up to 31st of March, after which it is subscription based?
No.
And do we need to pay right now to get our first report?
So you get what's called a basic report for free. And the basic report has the aggregate details. Basically, it shows you your performance versus benchmark. It shows you all the charts, that do not get into fund level detail. To access the fund level detail, you need to pay for the report, which is again 1180 rupees, including GST. And then that unlocks the full report. But it's not, you get to try the basic report for free, but it's completely different than the existing site. There's no trial period that we have.
Okay, I think that's it for the questions. Unless there are any more coming in, I think we can wrap this up. We've anyway run over 1 hour. It's actually like 1 hour and 10 minutes.
So I just want to thank the members. Look, we are motivated here by you guys, and we're constantly striving to ask ourselves honest questions about where are we adding value and where are we not. So when it came to transacting, the SEBI issue, coupled with the fact that, hey, we didn't feel like we had the best transacting platform around, we felt like we had the best reporting, so we want to focus on reporting technology to help you monitor your portfolio. And we love hearing from you guys. We love the fact that you join these sessions, engage with us. We get great ideas. Just in this Zoom session, I've come out with a few ideas that we definitely will incorporate. So thanks again, guys, and look forward to hearing more from you all, and hope you enjoy the new direction. Thanks so much.